Hi, my name is Lewis Scott. Thank you for watching my video. If you like the information I'm providing, make sure you hit the like button, the share button, and leave me a comment. By doing those three things, you help my video be able to be found by other people, because they can use the information too. Now, what we're going to talk about is Bitcoin, cryptocurrency, the volatility. We need the volatility of Bitcoin for us to be able to profit. But the only key point is missing is the knowledge, the information, and that's where Unifii comes in. Unifii has a product to give us the knowledge we need.
On the inside.
All right, let's bring in Authur Hayes, the co-founder and CEO of BitMEX, the Bitcoin Mercantile Exchange, which is the largest crypto trading exchange by volume. In a former life, by the way, he was a top trader for Citigroup. So, Authur, it's great to get your analysis here on the subject. Welcome to the show. So tell us a little bit about BitMEX. You deal primarily with institutional traders, correct?
No, we deal primarily with retail traders.
Retail,
in
okay.
North Asia. So our premise is that we want to give access to financial products to retail investors around the world using crypto, and right now that's Bitcoin. And so we offer highly leveraged derivatives, 100 times leverage we offer on the Bitcoin.
100 times leverage.
Correct. And our perpetual swap product is the most liquid trading product around the world. Does about 3.5 yards a day of flow.
Okay, so when we say it's by volume, it's because you're dealing with the retail trader, correct? And so they're presumably not trading the volume, the dollar amounts that institutions are.
Well, there's really not that much institutional presence right now in crypto. It is a retail phenomenon.
Are you equipped to handle institutional trades once that floodgate starts coming in, as so many people are predicting?
Absolutely. You know, we have an API, people can code against it, and we have a lot of prop shops and algo guys who've joined in because it's volatile, there's negative correlation to a lot of other asset classes, and they actually trade against real humans instead of robots all day.
The New York Stock Exchange just announced recently that it was going into also cryptocurrency trading, settling trades. And one of the biggest pieces was the custodial aspect. You have that figured out, though, correct? You have.
Well, we hold Bitcoin. We hold
Right.
a large amount of Bitcoin. We have certain processes that we believe have made us safer than others in certain ways we do things. But at the end of the day, you still have to take that risk if you want to trade.
Do you think that there's a risk, Authur, you just said 100 times leverage, and it's retail, and that's something that we know has been a real problem, especially in risk asset booms, right? I mean, how do you arrive at 100 times, and what's suitable, and is that something that is transferable to the United States? You said you're in Asia right now.
Yeah, so really it's a headline number. Most traders do not use 100 times leverage. So last time I checked, it was around 8.5 times leverage. So a lot of people use that as a testing ground or almost like a free option, if you will. I think the price is going to go up in the next 10 minutes. Let me place a little trade. If I hit it, great. I made 100% ROE. If I don't, I just lose my initial margin. So it's limited liability from the perspective of the trader. So unlike, you go short XIV and you get carried out and you got to sell your house, on BitMEX, you just lose what you put in.
Authur, kind of thematically, you talked about Asia, and clearly there's a ton of volume, and some are arguing that's 2/3 of the market. Why is that? And what do you see in terms of the U.S. retail presence in crypto in the near horizon?
Well, I think Asia dominates crypto because they're very used to trading digital assets. So take South Korea, for example. They've been trading digital goods related to video games for almost 2 decades. So when you move to a purely money-based digital currency, they understand that culturally, and so they grapple, get on board quickly. Take that to the West, where you have a very established banking system and things work pretty well. Why do you need to go out and find a new way to trade or a new way to do things? You have, a broker that offers you options, futures, all sorts of different products. So you move that into the developing markets where you don't have these type of products, and you see people who are a lot more interested in it.
You've got a stunning Bitcoin forecast. Where do you see it going?
50,000 by the end of the year.
By the end of the year?
Correct.
Now, in January, were you a little bit wobbly about that prediction?
No. It's my job to make predictions. Whether or not they're right or wrong doesn't really matter to me.
Oh, so you acknowledge them. You might be totally off base.
Authur, welcome to the show.
You could be one of us, I guess.
Why is that?
Well, I'm a volatility trader at the end of the day. We make our money if it's volatile. If it goes up, if it goes down, if you have Bill Gates calling it a fraud or we're harvesting babies, great. I mean, short it. I don't care. Or if you think it's going to be $1 million in a few months, great, buy it. Still don't care. We get matched trades.
Arthur, hope you'll come back.
Thank you.
Fascinating to learn about your business. Arthur Hayes of BitMEX.
Just match trades. I mean, it's interesting. Dan made the correlation between, and it's a great business, I'm sure they're killing it, but he made the correlation between is now gambling being legal going to hurt? I mean, in a lot of ways, what you're doing there, you're the man, I'm not bringing the guest back, but he's the middleman of people gambling, basically, which is fascinating. Right. And again, don't underestimate.
As long as a transaction happens, you make money.
So here's the irony. One of the reasons why crypto traders love it is because they're inefficient markets. There is enormous volatility, and there's been a lack of price see-through. And that's how you make money, or at least that's how you can make money, as long as you're on the right side of the trade. So if you think about institutional players getting involved, that should start to go away in a regulatory environment. The efficiency of these markets should be enormous. And a lot of people who want blockchain don't want it for the volatility. And, you call store of value and this and that. That's one of the big debates that's out there.
Tell you what I loved hearing. Arthur's a brother from another for me right now, and for you, I hope, because the whole idea of this being a derivatives opportunities here, and your limited risk to buying something that you think is going to go fly into the upside. I mean, it's the options world that we work in right now. With liquidity.
I'm kind of more in Tim's camp. I mean, this is my very solid belief that it is gambling that doesn't have regulatory framework, and we're just talking about gambling that's existed forever.
And people want
sport.
that.
I know, but I think right now when you're thinking about the volatility, there's a lot of stuff going on. Remember stock trading before Reg FD, that sort of thing. There's information arbitrage that's going on, and I think there's very few people that have all the information in the crypto space right now. So to me, I think it's
still true.
Well, I'm just saying, it's a bit of it's a rigged game. Okay, so we could never go out to somebody and say you should trade at 100 times leverage, and even if you're risking what you're willing to lose, what are you basing it on? A feeling, a gut? You wake up this morning, Bitcoin's going back above 10,000. I don't know, maybe.
Well, and it seems to me, and Arthur didn't sound like he was that convicted to call it 50,000. He cares more that there's enormous volatility in a sector where his company is well positioned to do it. But that almost seems to be the story. The story is that at least for a couple of the core vehicles that people can play that trade actively, let it rip.
He sucked me in right away.
Maybe part of the story is the picks and shovels as opposed to the end product.
That's the
right.
way.
I mean, in terms of investing in this space,
he's got the picks and the shovels.
Right.
No, but he's not mining for gold. He's not mining for gold. He doesn't even care if it gets to 50,000.
Yeah, but there's no exchanges in the U.S. that are allowing people to do 100 times leverage for good reason. They know that our regulators would be all.
Now that you watched the CEO of BitMEX talk about the volatility of Bitcoin, the phone is ringing. That's your dreams. Are you going to answer it? Or are you going to hang up on your dreams? Answer that call so that we can merge your dreams with Unifii, and your dreams will become wilder than you ever believed. Answer the call.